Hey there, happy Friday everybody. Hope everyone is doing great and welcome to another edition of JWJ Vid. Well, interest rates finished the week about where they ended last week, slightly better actually, not a big movement, and there was some volatility throughout the week, but the bottom line is rates are continuing to hold strong at some fantastic levels that we haven't seen since earlier in the year. We had a ton of economic data that was released into the market. The most important thing that everyone was looking at was the jobs report, which was released today. And it was a bit of a shocker. It missed expectations. Expectations were for about 180,000 jobs added to the economy. The real number came in at about 156,000. The unemployment rate went from 4.3 to 4.4. Average hourly earnings, those were up 0.1%, but it missed the expectations, which were 0.2%. So average hourly earnings kind of affects inflation, which is typically bad for interest rates. So it's showing that there's not a lot of inflationary pressure, and so that typically would be good for interest rates. Also, we saw the labor force participation rate at 62.9%, which is not very strong. So all in all, this was a pretty weak jobs report, and that would typically provide quite a bit of strength for mortgage-backed securities. It didn't really translate. Stocks are kind of liking the number a little bit, and the reason is that this will give the Federal Reserve pause during its September meeting. The Federal Reserve is meeting September 19th and 20th here, so just in a few weeks. It was expected that we might see another increase to the Fed funds and discount rate, as well as an announcement on what the plan is going to be for selling off some of mortgage-backed securities. And what these numbers are probably leaning towards is the Federal Reserve is going to really need to be measured about it. Maybe another increase to the Fed funds rate and discount rate is not going to be on the table. That's actually what I'm thinking. So stocks are going to like this accommodative continued stance. It's not going to be a big shock to the economy, so they're just going to think this is okay. And generally speaking, mortgage-backed securities are doing well today on this announcement. They're not really increasing dramatically, but they're not going down. So the fact that we're at these levels and they're holding strong is a good thing. So we'll probably see continued good, great interest rates here for at least the next couple of months due to what's going to be happening with the Federal Reserve. But a lot of volatility can be here, so we'll keep you informed as to what's going on. We also did see a lot of economic data other than the jobs report released. We did see pending home sales come in, and that showed some weakness. It showed a decrease of 0.8%, and that is weaker than expected, but it's also because inventory levels are down almost 9% as to where we were last year. So it's just low inventory probably causing some of these weaker homes under contract. We did also see the Case-Shiller Index come in, and that showed that Denver is number 4. The year-over-year number, and this is for June, so it's a little bit behind the curve here. The year-over-year number for Denver overall was an increase of 7.6%. That is behind Seattle, which is just killing it at like 13.4%. Then there's Portland, and that's like at 8.2%. And then there is Dallas. Dallas, we've been kind of going back and forth here every month, but they're at 7.8 7.7, and we're at 7.6, so still real strong. And our month-over-month number was 0.8% increase, which on an annualized basis is real strong. So the other piece of information that the market was looking at was the personal consumption's expenditures, and that showed an increase of 1.4%, which is lower than where the Fed would really like to see this. They want to see inflation at around 2% or hopefully over 2%. So the trend here for the PCE and inflation has been moving lower. And because of that, the Federal Reserve, that's just more ammunition that they're going to have to be measured, and they're going to be concerned that whatever they do regarding rising interest rates or even tapering the balance sheet could be a shock to the economy, and they don't want to see that. They want to see inflation a little bit higher. So it'll be pretty interesting what's going to happen in a couple of weeks. And as always, we'll keep you informed. If you're working with anybody this weekend and they need some help, please give us a call. We're always here to help. Thanks for joining me with Job with Jared. We'll keep you informed, but rates are great. Call your clients, get them out there looking, and get a home under contract. All right? Thanks for joining me, and we'll talk to you soon. Bye-bye.